Hey, folks, welcome to InTheMoneyStocks.com's live trading action video. My name is Gareth Soloway, Chief Market Strategist here. Today's date is Monday, August 12th, 2019. So here's the chart of the SPY, which mirrors the S&P 500. It is the tracking ETF for the S&P 500. As you can see, we have now fallen back down today. This is the daily chart, so having a sharp down move about 1.33% to the downside, down 4 points on the SPY. This is quite an intriguing move lower, but not entirely surprising. If you were a member late last week, you guys know we reshorted the market when we came up here. So we flushed here, we covered our shorts down here, and then look at what you got. You got this perfect bounce right back to gap fill, 50 moving average. That tells you, I mean, it's basically begging for you to short the S&P 500 there or short stock. So that's exactly what we did there, folks. And again, we are in the money on these right now and enjoying ourselves very much so. So we'll see how things go, but ultimately the reason for the decline today is pretty simple. Continued worries over what's going on with the trade war, how it's going to impact the domestic economy. What you can see today is interest rates are falling, which tells you, again, there's concern that the U.S. economy may be weakening sharply, and therefore, again, interest rates are falling just by nature, right? Meaning that the weakness, the worries are making people think that the economy is going to slow down, therefore interest rates are going lower, because the idea is the Federal Reserve is going to have to cut rates even more so because of the slowdown. So that's where we sit here. Notice the TBT again, which gives us a good tracking of the interest rates. Notice the TBT is piercing the pivot from the other day, but it hasn't closed below. I'm very curious to watch where it closes today. If it closes below that low from last week, where the trend line originates here, that's a concern overall. You could see a spiral to the downside where interest rates on the 10-year get close to 1.5%. Okay, and that would be a big deal for the market. I mean, that's not just a little thing. That would be a huge deal. Right now, the 10-year sits at 1.642%. So, I mean, we're not that far away. Another 2 days like today, and you're below 1.5%. Now, the other thing that's concerning the market is the 2-year interest rate versus the 10-year interest rate. The 2-year is getting close, very, very close to overtaking the 10-year interest rate, which means you can get more money for just locking your money up for 2 years than you can for 10 years. And that is an ominous signal. A horrible signal for the overall economy if that does happen. It's basically predicted every recession going back as far as they've been tracking it. So, again, keep an eye on the 2 and 10-year spread. Right now, basically almost equal. The 2 is just slightly less, but if the 2-year overtakes the 10, watch the fireworks fly. The markets will sell sharply on that. All right. Other than that, again, gold performing amazingly well today, up 1%. The GLD is just on fire, folks. Take a look at the GLD today, just continuing to rally higher. I do have a shortable level on gold. I will give it to you guys in this video here. And to get that, I'm going to just jump over to my weekly chart, flip over to my weekly chart. All right. So looking at this chart right here, it's right around 144, just underneath 144 right here. So look at how close we got today. We actually got very, very close to that. But this is your shortable level. So there could be one more move up on gold tomorrow, and then I will probably take a short position on gold. So again, if you're a Research Center member, you'll get that alert when I do that. And again, it most likely will be through an ETF, probably an inverse short ETF, maybe a double or a triple. All right, looking throughout the lines of what stocks are moving today, we're seeing continued weakness. Obviously, Amazon's under some pressure, down 27 points. Google's down 16 on the day. Apple is hanging in there. I mean, considering the market's drop today, Apple only down $1 on the day. That is not too much of a move. This is the weekly chart. Let me flip over to the daily chart. I still think there's actually more upside on Apple here. My guess is at some point in the next couple weeks, we go back to fill this gap. That's where I'll be looking to short. We were short Apple earlier, when we were falling here, and we made money on it. Now I'm waiting to reshort until it gets back to this level. And this is the beauty of what we do, folks. I mean, members are just cleaning up here in terms of profits on swing trades, on options, as well as day trades. And the beauty of it is the volatility now is just giving us so many opportunities where we're pretty much every day taking profits on something. For instance, I bought some QQQ puts just the other day, and when we were right up here, and I just sold them today, 25% profit. Boom, just like that. That was in a couple days of holding it. So again, it's this is the type of market where you want to swing trade, you want to rock it, and so many opportunities, trades going out every single day. I just bought something new in the research center today. Friday, Thursday, Wednesday of last week, we were taking profits on other things. And again, you can just check out the track record for yourself under free services, the research center track record, and you can see all the trades that I've taken, verified, and so forth. All right. Other than that, I don't have a whole lot else. Markets, even for the bigger down day today, it's not a very volatile intraday period, even though it's a bigger move to the downside. And again, that's nice to see, as it's not too crazy. If I go to the intraday chart here, let me just bring up the intraday. You'll see what I mean. Um, you can see we've kind of just been kind of slowly going down a good chunk of the day. And here you can see chopping here, and then we just slow bleed lower. Looks like we put a little bit of a short-term bottom in here, but I wouldn't be surprised if we see more selling into the end of the day here over the next 30 to 40 minutes. All right, guys, again, bottom line is come join us at inthemoneystocks.com. Get my next trades. They are constantly going out, and they're, again, we're batting this year in terms of swing trades about an 87% success rate. Day trades 95% right now, and options are around 70 to 72%. So again, it's worthwhile. I don't care what you want to do. You can do all of them. You can do one, but people are making money, put it to you that way, more than any other service out there. That's why we've been around since 2007. That's the last thing I'll mention is just our longevity proves to our members that we give profitable trades, and that's why we've been around for so long. Take care, guys.